Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, we did just have another weekly close. Bitcoin closed the week at right around $98,000. The bull market support band has obviously gone a little bit higher. It's now about 79K up to around 84K. Now, what's interesting is this move that we've seen throughout December is still really similar to what we saw last December, right? And then as we got into early January of 2024, what we saw happen was we saw Bitcoin sort of spike up into early January, then get a sell-off in late January, and then get another move up in February, right? So that's basically what happened last year. And the reason I bring that up is because 2024 very closely mimicked 2023. We talked about that a lot, right? If you go look at year-to-date ROI of Bitcoin in 2023 and you compare it to 2024, they are almost a carbon copy of each other, right? And so because of that, right, it makes sense to still make those comparisons until they're sort of proven to no longer have value, right? And one of the things you'll notice is that, even this move is really similar, right? You see this move here, how it started in October. Really, it started like in September, kind of the same thing that happened the year before, right? You got a move in September, it slowly moved up, and then it got a more explosive rally into December. Everyone was expecting it to go even higher in December, and then it just kind of like stalls out for a little bit, right? This is exactly what happened last year. In fact, if you look at the extension from the 20-week moving average, right? If you look at the log, the natural log of the price over the 20-week moving average, you can see that it was almost the exact same thing, right? I mean, look at the extension here above the 20-week moving average, basically the same as what happened these past few weeks. You could also visualize it with the short-term bubble risk, like just the extension for the 20-week moving average. Bitcoin has essentially had sort of these moves above the 20-week SMA where it goes above it for a while and then it eventually returns. It sort of checks in with the bull market support band. And it actually in Q3 of 2023 and in Q3 of 2024, you can see that's where Bitcoin went below its bull market support band. This is actually a little similar to what happened in 2016, 2017, although Bitcoin didn't really go below the bull market support band back then, right? It mostly stayed above it. But the extension from the 20-week moving average was pretty similar, right? Where you basically just had sort of these periods where it would go above it, but it wouldn't really go that far above it. And it didn't really accelerate beyond that until April of the post-halving year, right? April of 2017. But every other peak was a lot more tempered, as you can see. Now, what's interesting, too, is if you look at the weekly RSI of Bitcoin, you can kind of see a pattern that might be something that we check back in with later on this year. I'm not going to mention it a whole lot because I don't really talk about the RSI that much, but this might be something we check in with by Q3 of 2025 because if you look here, you can see that in Q3 of 2023, the weekly RSI found support at 45, and then in Q3 of 2024, it found support at a weekly RSI of 45. And so I wonder if we will find the weekly RSI back down there again by Q3 of 2025. Now, obviously, a lot can happen between now and then, right? It's not like the weekly RSI just has to immediately drop down. It could go up and do something like that and then drop down, right? It could do all sorts of things. But the point is that, you might find it down there once again in like half a year, right? Which is a long time from now, right? It's a long time from now. And you can see that in the last 2 years, the weekly RSI topped out. Last year, it topped in March. The year before that, it topped in April. What's interesting is that the first top, right? The first top was a little bit lower than the second one, but when it came back down, when it had this drop in it had this drop in December into early January, it actually bounced right at essentially the current levels. And that's actually where it bounced at. But that bounce, of course, didn't actually occur until later on in January. So, you know, you could still see a repeat of last year where it I mean, and even if it were to repeat last year, you could still see a new all-time high. Um, but the real move didn't come until a little bit later on, and so I do wonder if you'll see that happen again, right? Where maybe it still trends up into the labor market stuff, but it still doesn't necessarily mean it's going to be a sustained move higher until you have another couple more, few more weeks to consolidate. I mean, again, it just seems like a really similar move, right? It seems like a really similar move. So look, I mean, if there is a drop, if you sort of see it do what it did last year, where it spikes up and then spikes down, what you would want to see is Bitcoin find support at the bull market support band, or even better yet, find support before it reaches it. You can see that last year it found support before it even reached the bull market support band, right? Because the bull market support band was all the way up at, the higher point was about 37.4K, and Bitcoin just went to 38.5K. So it came to within $1,000 of it, but it didn't actually tag it. And so you could see something like that happen again. So that's why I just provide you the updates on the bull market support band, like where it is. And again, right now it's ranging from like 79K all the way up to almost 84K. And if you look here, right, you can kind of see these support levels that Bitcoin's been bouncing off of. This wick would be, a potentially interesting wick later on, but it might not become that interesting for another, month or something. But I did think that it was important to recognize that there are a lot of similarities between what's happening this year and what happened last year. You could also argue, too, that even these highs look kind of similar. But if you look at it this way, it's almost a little bit more accelerated, right? Where, like, what if we've already seen that move up, right? And then what if this was the move down, right? And then you get sort of a move up and then maybe some consolidation. So, all sorts of ways to look at it. What would cause Bitcoin to really go up or down? I mean, I think a lot of what's happening is just, it sort of makes these moves. We talk about it like every month, right? It makes a move higher, sort of in anticipation of all the labor market releases. And then based on the labor market release, then it decides what it's going to do. So, for instance, if you were to overlay the unemployment rate onto the chart, when, as long as the unemployment rate is barely moving higher, Bitcoin goes up, right? And even throughout this entire period. But once the unemployment rate started to regularly move higher, right, where it was going up a tenth every labor market release, that's when Bitcoin was like, okay, let's consolidate for a little while and see what's up with this. If this continues at this pace, like if the unemployment rate had continued like that, then Bitcoin likely would have continued going down. But we had a few good data points. And remember, the market doesn't need a reason to go up. It needs a reason to go down. So as long as the labor market isn't giving Bitcoin a reason to go down, then it uses that opportunity to go up, right? And it basically, as the unemployment rate came back down, that's when Bitcoin started to go back up. And then it broke through resistance here as the unemployment rate was all the way back down here. Now, if the unemployment rate comes in at 4.1 or 4.2%, that's probably a good thing for Bitcoin. That's probably a good thing. If it comes in at 4.3 or 4.4, that could have the market questioning, right? Like imagine if it comes in at 4.3, that could be a perfect excuse to kind of repeat what happened last year where the market just consolidates for another month and then waits for another labor market release in February to then see, is it going to stop or will it continue to go higher? So that will be interesting to track. So I would say, if the unemployment rate is 4.1, 4.2, Bitcoin probably won't care so much about it. If it's 4.3 or higher, then Bitcoin might care a little bit more about it just because, as we saw over here, if the unemployment rate is going up, Bitcoin would struggle for a little while. And I know a lot of people don't like to look at this stuff and they think it's not important, but listen, guys, I mean, this stuff is, you can pretty clearly see these correlations on the chart, right? As long as it's a slow move up, Bitcoin doesn't care. If it's a quicker move up, Bitcoin did start to care. And if you guys roll back the clock to March of 2024, we said back then it was likely a mid-cycle top for about 6 to 9 months. And that's exactly what it was. It took about 7 to 8 months to put on a new all-time high. We said 6 to 9 months. But a lot of the people that discount this stuff, we're certainly not calling for that move. But if you track the labor market, you could understand why that move was going to happen. So that's why it'll make sense to sort of view the labor market release this week with scrutiny to see, where is it, and try to decipher what exactly that means for Bitcoin. Now, the bull market support band is always sort of the first line of defense for the bulls, right? So in a bull market, this is always going to be sort of that main level of defense. And you can see that Bitcoin has bounced off of it a number of times. There have been a couple times this cycle where it fell below the bull market support band. Q3 of 2023, Q3 of 2024. If you do get a larger drop by Bitcoin at a time when it doesn't normally drop, right? Let's say it would make sense for it to the next sort of drop potentially below the bull market support band to be Q3 2025, right? If we're just going to repeat the same pattern over and over and over again. If, however, it comes sooner, let's say you get a higher labor market read than anyone's expecting, right? What if it comes in at 4.5 or like 4.5%? Then I would argue that it still doesn't necessarily mean the party's over, but you might go back and retest this. Sort of this lower high structure that Bitcoin was putting in. It's always possible that you retest that and then get a bounce back up, right? But I don't think it needs to go that low. But you can kind of see like there's this thing called time-based capitulation, right? Time-based capitulation is probably just as important as price-based capitulation. So you could argue that this here was time-based capitulation, where the people that were going to sell sold, and they had weeks to do so, and that's what kept the market from going anywhere. But the price didn't really go that far down. It just consolidated for a couple of months. This was the same thing, except, longer and more drawn out. It was time-based. It wasn't, obviously price went down a little bit, but in the grand scheme of things, the price didn't really drop a lot, right? In fact, if you look at like 2-month candles and you just look at a line chart for last year, you would be hard pressed to figure out, to show somewhere, to show someone when did the price of Bitcoin actually drop last year, right? So I think you always have to keep it in perspective, right? You have to keep it in perspective. So, I think that the bull market support band will be the first line of defense if we have to go back down there and test that level either later this month or February, right? That would be sort of the first line of defense where you would expect some type of reaction. And that's exactly the reaction we got last year in late January. And even when we hit it later on, right? The very first time, a lot of times when you hit the 20-week SMA after bouncing off of it for a long time, you get a knee-jerk bounce off of it, just like you got here in April of 2024, right? Just like you got here in March 2023, right? So the first drop to it, usually there's a bounce off of it, okay? I'm just saying that if it were to break, doesn't necessarily mean the party has to be over. You still might just go back down, test this, give a reason for the Fed to start printing or something, and then keep going. So just a couple of different ways to look at the market. The other thing to remember too is one of the reasons why you get these consolidation periods is there's been this, this idea of diminishing extension from the 20-week moving average. And as you can see, every single time we reach this point, I think a lot of people sort of discount this trend line. But every single time we pull it up, it ends up marking a local top for at least a little while, You can see we pulled it up here in March of 2024. We also were talking about this in late November, early December when we were doing our 100K watch party live streams. And you can see, it's not that Bitcoin can't go up. It's just that the extension from the 20-week moving average has diminished from one cycle to another. And the reason is because it just takes exponentially more volume to move the market cap. So it makes sense that it can't go as far beyond the 20-week moving average as it historically has done. So that's essentially what I wanted to cover today for the bull market support band video. And I do appreciate you guys tuning in. And I do apologize that I haven't really been posting as many videos recently or as many of you guys, have commented, they're just shorts. But, the holiday season is harder to get those videos out. So we'll try to get back to the, sort of more videos and a little bit more in depth as we get further into 2025. I do want to appreciate you guys for being here and for, joining us along for this market cycle. And again, maybe one more thing to check in on. We'll do more videos on it. But if you look at the market cycle ROI of Bitcoin, it's sort of the ROI from the bottom. Bitcoin's actually right where it normally is around this time. And actually, if you look at this cycle compared to the 2016 cycle, you can see that what essentially happened is Bitcoin kind of spiked up right around this time. Right, it spiked up, and then it had a sell-off, which is funny because that's exactly what happened last year, right? I mean, where it spiked and then it sold off. Remember, that's exactly what happened last year, right? Bitcoin spiked up here, and then swept these lows, right? So that's what happened, right? So if it happens again, it would mean sweeping this high and then sweeping this low, right? So like something like this, right? If it were to repeat 2023, and if it were to repeat what happened here in 2017, or this 2016-2017 cycle where it got this move up and then it had a correction down before then picking back up. But anyways, guys, that'll wrap it up for the video. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.